to the Mortgage Rate Weekly Market Update for December 31st, 2018. Hello, I'm John Thomas with Prime Residential Mortgage, here to give you your update. This is the last update for 2018. Tomorrow marks the new year, so Happy New Year. Welcome to 2019. And we've gotten a gift from the mortgage bond market. If you take a look at the bond market on the screen, you can see mortgage bonds had sold off and hit the low of the last 7 years on November 8th, which means mortgage interest rates opposite the bond price hit the highs not seen in 7 years. But since then, mortgage bonds found a floor of support on the 8th, have rallied higher since then, and most importantly, have broken through a bunch of layers of resistance. They broke through the 25-day moving average, then the 50-day moving average, and then a tough ceiling at the 100-day moving average. And then finally, right on the week of Christmas, broke through the 200-day moving average, which has been a huge ceiling resistance for a very long time. That was good news. We closed above it, as you can see. We stayed above it for the last week. And then on Friday, big green candle there, we went all the way up to the next ceiling of resistance. So we're going to recommend you lock your mortgage rate to start the week to see if mortgage bonds can build on this momentum and push through that next ceiling of resistance. If they can, you could see a slight improvement in mortgage rates. Now, if they get turned lower or the stock market rallies, we could see mortgage bonds sell off. So we would quickly switch to a locking stance. But right now, go ahead and float. Now, in the economic news, the government is officially shut down. What that means is non-essential services are not, federal employees are not putting to work. So it does have an effect on mortgages. So the first thing is the mortgage flood insurance program. The National Flood Insurance Program has to keep being refunded by Congress. It was going to run out on the 21st. But the Congress passed a bill on the 21st to extend flood insurance coverage to May 31st of 2019. So we got a nice gap there of where we don't have to worry about Congress refunding it. But FEMA said during the government shutdown they would not issue new insurance policies. So that was going to affect about 40,000 homes not being able to be sold each month during a government shutdown. But FEMA, good news, reversed their statement on Friday and announced they will be issuing flood insurance during the government shutdown. So there will be no delay in closings from flood insurance if you need it on the purchase of your home. Now, how does the government shutdown affect mortgages? Well, if you're getting a conventional loan, a VA loan, or FHA loan, all of those can still be closed by your mortgage lender, so that's great news there. But if you're getting a USDA rural housing loan, that cannot close because USDA is shut down. They're not issuing any conditional commitments or underwriting files during the government shutdown. So you're on hold until the government comes back, and then you'll get in line for them to review the file and issue the commitment. Also, IRS will not process tax transcripts. So if you are required to have tax transcripts by your lender or your loan program, you cannot close till the IRS is up and running and issuing tax transcripts. Now, primary residential mortgage is closing a lot of loans without the tax transcripts during the government shutdown. So if you need help, need to get closed right away, we have a priority rush called our rescue program. We'll put you in that. Give us a call, 302-703-0727. Now, in other economic news, we saw that the weekly initial jobless claims came out and they dropped 1,000 claims to 216,000 claims for the week. Now, the previous week was the sample week being used in the jobs report, and it was revised higher from 214 to 217. Not a big deal, still very low jobless claims. So that data is pointing to a good jobs report, which comes out Friday, January 4th for December jobs report. Now, the market's going to be looking at that very carefully. Two big factors they're going to look at. One being the unemployment rate, does it ticking up or staying the same? And then the other big one is average hourly earnings and average weekly earnings, because they're looking for wage pressure inflation. If we have wage pressure inflation, that'll be bad for mortgage bonds. If we don't, that'll be good. So we'll keep you updated as we get closer to the jobs report coming out on Friday. Now, in the housing news, we had pending home sales from November 2018 come out, and they were down 0.7% to 101.4 on the index. It was weaker than expectations of a 1% gain. Pending home sales are also now down 7.7% year over year. So even though this report was a myth in terms of we didn't get the gain of 1%, NARS, which is the National Association of Realtors chief economist, Lawrence Yun, he's still very optimistic on housing. He stated, and I quote, "The latest decline in contract signings implies more short-term pullback in the housing sector and does not yet capture the impact of recent favorable conditions on mortgage rates." So Yun expects solid growth potential for housing in the long term. So that means housing is still going to be a great investment. There's still opportunity there. The appreciation rate is still great. Now, the other report that came out last week was the Federal Housing Finance Agency, or FHFA for short, released their house price index for October 2018. It showed home prices rose 0.3% from September. And year over year, it still increased 5.7% year over year, but it's down from 6% in September on a year over year. So that's not a bad report. Home prices are still going up. It's kind of like home prices were going 90 miles per hour. Now they're going 60 miles per hour. So we're still moving forward. We're still moving fast. We're just not appreciating the same rate. So home prices are going up, just not going up as fast as they were. So it's still great news for you if you're looking to purchase a home or if you own a home. That means your home value is going up, and it's still very meaningful. It can help generate enormous wealth long-term if you're investing in real estate. So that was some great news there. Now, the local news, we've got the next first-time homebuyer seminar on Saturday, January 12th in Newark, Delaware at the Christiana Hilton Hotel. And then we're back in Wilmington on Wednesday, January 23rd from 6 to 8 p.m. At the Independence Mall at eXp Realty Office Suite 88. You can register for either one of those events, but give us a call, 302-703-0727, or go online, www.delawarehomebuyersseminars.com. And then we're back in Maryland on Saturday, January 19th from 10 a.m. to noon in Edgemoor, Maryland. You can register for that one by giving us a call at 410-412-3319 or online, www.marylandhomebuyersseminars.com. Look forward to seeing you guys next week and in the new year.